Welcome, ladies and gentlemen. I'm going to tell you about probably the most incredible opportunity that is available right now on the planet. And I don't mean this with any exaggeration. What I'm about to show you is something that is absolutely a game changer for you and for me and for everyone in this room. So I really want to acknowledge you for actually being here to listen to what I'm about to show you. You've actually all been given some articles, and these articles are from the front one is from today's paper about Australians going to the US and taking advantage of what's going on. Behind there is an article from the Financial Review, which is from the last weekend, that goes into even more detail. All right? So what I want to show you is
Sure. My name is Luke Camilleri. I'm 29 years old. I am in banking. I've been a mortgage broker or in the mortgage broking business for just under 10 years. Well, I'd actually been researching for 6 months even before I met Kevin, so I sort of had an idea that the returns were going to be good. One of the things I was really, really excited about was the quality of property over in Phoenix.
Now, you actually picked up a fourplex, correct?
Correct. We think the value was about 200,000. I think it sold 200,000 in 2006, so probably at the peak it probably would have been about 250, I would have thought.
And you paid how much for this property?
I paid 55, and then I'm putting another, say, 35 as a maximum in there. So we're looking at 90,000 as a maximum.
And what type of rent return?
We will definitely get, we think about 2,500 a month, so 30,000 a year. So, well, that's closer to 30% gross, isn't it, really? The other property was a standard household dwelling with a pool. I picked it up for 57. Rent to a really nice family, so that'll be a good rental return. I think that will probably be closer to your 12%. The lawyer over there is fantastic, the rental manager as well. It's been really informative as well. That's the important thing to say. Once you're over there, you really get a feel, and it actually builds your confidence, because the process from start to finish has been informative, been thorough, transparent, everything that I wanted it to be. And it's made it so easy for me to say, hey, let's go ahead and get moving.
There is literally starting to be an avalanche, a stampede of Australians going to the US. Why? Because in the US, you can get access to properties at incredible prices. Now, some of you have heard about this, but let me give you an example. What if you could buy for 25,000 Aussie dollars a property in the US that gave you a 25% rental return? Who would just think that's incredible? Right? That's just unbelievable. In fact, I'm going to have to ask you something tonight. You need to change your mindset, because I'm going to share with you some things that just, from an Australian mindset, do not make any sense at all. Literally won't make any sense. You won't understand. Like, you could say, how the heck is that even possible? All right? So what we're going to cover tonight is I'm going to talk to you about these 4 things. The history of the US property market, a strategy specifically to invest in Phoenix, and I'm going to explain to you why Phoenix is the choice. I'm then going to talk to you about our partners over there, and it's called Total Property Solutions. And then I'm going to talk to you about investing in the US market via 21st Century Property Direct, using our property system for the US. So a little bit about the history of the US property market. This is what United States property prices have been doing. Can you see a particular trend there? It's gone up really sort of fast, but then it's dropped quite substantially. Can you see that? That's US prices, adjusted for inflation and normal house prices. This is what Phoenix has done. In fact, Phoenix has dropped further than the trend for all of US. Now, some people say, well, I'd love to buy properties in Texas, because I hear Texas is pretty good. Well, let me tell you the problem with Texas in comparison to Phoenix. Texas property prices haven't grown much. They've been very stable. They've trended upwards, but they haven't grown really fast. And consequently, they also haven't dropped very far. Now, as an investor, do you want a little opportunity, or do you want a lot of opportunity?
A lot.
Which one? Come on, little or a lot?
A lot.
A lot. Well, in the case of Phoenix, can you see that from the top to the bottom, there is a lot of difference? These are the sort of places we are looking for. But you could easily make the mistake of looking for any place like that in the US and be caught in places where literally the businesses that used to be there have used the GFC to shut down their business completely and move some divisions away to other cities, never to return. So some of the jobs in some parts of the US cities have been lost and will never return to those cities. Do you think that's an important economic consideration? Yes or no? Yes. Of course it is. So, look what's been happening. There's been a surge of toxic mortgages from mid-2000 to mid-2007. You can see all the different colours there, the subprimes, etc., of what's been going on. These are some of the house prices. These are some of the specific cities. And you can see that there's been quite a number of cities that have had these huge bumps. The problem is that we have many different criteria as what we look for. And the number one criteria we look for is there's been a big upsurge, big downfall, and there's been a strong, consistent, resilient rental market. To put some numbers around this, let me show you. You have some places in the US where properties were, and specifically in Phoenix, if I can just go to the flip charts, were $250,000. And they have dropped to maybe $50,000. In some cases, $70,000. In some cases, even more than that. So that represents a drop of up to 75%. When was the last time you purchased anything that was a 75% drop? And here's the miracle part about it. The rentals haven't dropped by much. So even though they used to be getting, 3 to 5% rentals, their rental dollar figure hasn't dropped much, but because the price has, it means the percent yield has jumped to 10, 15, 25%. Who understands why? Because the base price has dropped so much. That's the miracle of what's going on there right now. Now, do you know in the US, it is in most places cheaper to own than it is to rent? By far. But you see, people in the US can't get loans. Many people have had their houses repossessed or their FICO scores weren't that high, so there's no way they're going to get a chance to be able to buy, and they are forced to rent. Who understands that? The other thing that's happened is because they've lost their homes, they have to rent, but many of them are moving to where there are jobs. When you move to a new location where there are jobs, are you going to buy immediately? Even if you can afford to buy, will you buy immediately? Don't you want to get the lay of the land, go past probation, make sure that the job is secure and what you want, and then you start looking for a permanent residence, correct? So this is why even people are choosing to rent until they actually find their feet and they're really certain again, okay? Now, does this give you an idea of the rate of foreclosure, right? It is going through the roof, right? Consistently rising. Now, just to put a number on this, the current number of houses that are currently in default in the US is about 7 million. Do you know that represents, if you added up probably every house in major cities such as Sydney, Melbourne, Brisbane, probably Adelaide and Perth as well, that's how many houses are in default at the same time. You can't get your head around this. See, Australia's a population of about 21 million. Over there they have over 300 million. You can't understand, your brain can't function to say, what, every house in Australia in a major capital city is in default. We can't process like that. But that's the equivalent number that they have in default right now. This is how big the problem or the opportunity, depending how you want to look at it, is. Is that vast or what? All right, they have approximately 300,000 new houses per month go into default. We're only scratching the surface with how many properties that our members want to actually buy. 300,000 houses a month are in default. All right? Look, there's plenty of graphs to keep showing what's going on. But at the moment in the US, it's not just a garage sale, it is a fire sale. Who likes the sound of a fire sale where you can take advantage of that? Anyone? Oh, come on. Who wants to make some money? Show me. All right? So in the US, what's going on is this. We have partnered with a team of people over there. We have done comprehensive due diligence before we did all the partnerships over there to see who would meet our requirements. Let me tell you, the people that we have actually partnered with in these selected areas have been doing this for a long time. In fact, the main group we're working with, they have been doing this for over 10 years. They are what's called a super wholesaler. A what? Super wholesalers usually only deal with wholesalers who then deal with distributors and real estate agents, right? All the middlemen that often are retail facing, all right? They also sometimes deal with large institutions. These people buy between 300 to 500 properties a week in cash. Are you at that level? We're not at that level. These people, you want to be at that level, right? But these people, they do quick turnover. Properties only stay on their books for like a couple of weeks or a month at a time. That's it. Guess who they sell to? Other wholesalers and other little middlemen. But they won't deal with you unless you're buying 50 to 100 at a time. They're just not interested. They'll pass you on to people much further down the pecking order. What do you think happens to the selection much further down the pecking order? Do you get the best ones if you're much further down the pecking order? And what do you think happens to the price much further down the pecking order when everyone adds their margin? You're paying much, much more. Who understands? All right? So, we've created these strategic alliances with these companies that have been doing it for over 10 years. In fact, when this company started doing this in the US, foreclosures represented less than 0.1% of the entire property market. And then and so they built their relationships on that. They specialized in that niche. And then along came the GFC, and they were in a better position than anyone else to take advantage. So they already had the systems, the connections, and the processes in place, and the people. They just ramped up their business. Who understands? All right? So they grew very rapidly because of this, because they could actually deliver these results. And what I mean by results is some of you may not understand. In Australia, when a property goes into mortgagee possession, the bank has the right to take it, and then they get a valuation, they sell it at auction. In the US, there is no such requirement. The bank just takes it and they sell it. They can sell it to whoever they choose to. It's theirs to sell. Is that a difference? It's a huge difference. So many of these properties are sold at auctions on county court steps. But now there's so many of them, or inclement weather, they actually do them indoors in one of the offices, right? When you go to some of these places, unless you can prove that you're either a US citizen or a green card holder, and or you can buy a certain number of properties with cash immediately, you probably won't even get in the door. Does that make sense? You just can't even get in the door. And they have them in every county all over the place. Imagine how much money it would have cost you to be on the ground for 12 months, researching the market, have a team there with you, attend all these different county auctions. What would that have cost you? Because that's what we've spent. Why? For our members. Who are our members? Us, including me, because we want an incredible system to help our members get incredible results over there. What we're planning to do is a US due diligence tour. Picture this. Imagine being side by side with me and all of the Property Direct team. And I mean all of them, because all of us are going there in January. We want to clean up. We want to go berserk. We each want to buy 20 properties, right? Who wants to buy 20 properties with us, right? We want to go over there. We want to buy whole streets or suburbs together. We're actually going to be on the bus. We're going to be going around all of Phoenix. We're actually going to be looking at all the different areas, the different types of properties. We're also going to get some of the best people teaching us. We're going to get a company. Who's heard of Philip Fox? Anyone heard of Philip Fox? They're the number 3 law firm in the world in terms of size, right? They belong to a big conglomerate, and it's their parent company. Those people will come along and explain to us everything about the right structures in the US, as well as the dual tax treaties and the best way to repatriate money and vice versa. So we've got the right people in the US, but we also have a group over here. They're based in Melbourne who have already been helping Australians do this already. They'll be teaching us. They're accountants, they're financial planners, they're solicitors. All of these people will be on your team teaching you everything you need to know. In fact, they will not be allowed to leave the room until every single question is answered, right? So do you think that would be very valuable? To be fully educated, then be on the road, looking at all the sites. In fact, one of the testimonials that I'd love to show you is a young gentleman called Luke. And Luke is a mortgage broker who's 29, who's based in St Kilda. And he just bought, actually I can tell you the numbers. He just bought what's called a fourplex. A fourplex is 4 properties jammed together under one roof line. Right? He bought a fourplex for $55,000. 4 properties, 2 2-bedders, 1 3-bedder, and 1 1-bedder. $55,000. Now, he's going to do a renovation on it. He believes the renovation will cost him about $30,000 for all 4. That's about $85K. He's worked out his numbers based on the monthly amounts that he'll get on all 4 properties. He'll make $30K per annum. What do you think his return is per annum? Gross, it's over 30%. The properties that are higher density, lower land, same as in Australia, they get higher yields, right? But they have less potential growth in them, right? They're apartments or multi-unit sites. The houses, they usually grow more, but the yield is lower. Who understands that? All right? So it's the same concept, but the numbers are just crazy over in the US, right? He sold his Australian properties because he was doing negative gearing and not getting very far and really struggling, right? He went over the US, he's looked at lots of different cities, and he actually understands that one of the things that we can provide is access to not just the properties, but more importantly, he actually says in his interview, to a team. Because it's so important when you're looking at properties from far away to have the right team, the right accountants, the right solicitors, all of these sorts of things. To give you an idea why a team is so important, you can actually go to the US right now, and if you applied for an ITIN number, which is like a tax file number, it could take you 6 to 12 weeks. Then you get your bank account. It takes a long time. We, through our team, can get it done in 48 hours. Now, is there a benefit to that? You bet there is. Because if you can have that set up before you have the property in there, then a whole lot of your other expenses can be claimed through that. I'm not going to go into too much detail, but some of you know what I'm talking about, right? Rather than setting it up afterwards. There could be a huge tax benefit in setting it up in the right order. Let's just leave it at that. So, who would love to look at properties that have dropped by 50 to 75%? Be shoulder to shoulder with us looking at those properties. Who'd want to be on that tour? Right? Imagine spending 5 to 7 days driving around, having all your questions answered, getting educated, and we're actually going to get the mayor of Phoenix to come along. We're also going to get the head of the economic development group of Phoenix to come along to tell us and show us who are they bringing, who are they poaching from other cities to bring into Phoenix. Now, just so that you know, Phoenix is a very safe city. It's got a lot of education there. It's got a lot of families there. It's much safer than somewhere like a Los Angeles. In Los Angeles, there's places at night you just would not go, right? There's streets and streets of them. In Phoenix, there's probably a couple of streets that you feel a bit sort of cautious going to, but that's it, right? Phoenix is much, much safer because of the demographic. It is also the home of 7 out of the top 100 Forbes companies. Intel is there as well. Has anyone heard of Intel? Do you think Intel might be producing some more stuff in the future? In this area, Phoenix has a huge amount of sunlight. The US is pushing green technologies. Guess where they're going to be actually doing a lot of the research? At the universities and places where the sun shines a lot. It shines a lot here. In fact, Phoenix has one of the largest universities in all of the US. Arizona State is one of the largest ones there. In fact, one of our colleagues was over there and they were driving along and he said, "Oh, when will we get to the university?" He goes, "We've been driving through it for the last 10 minutes. It is that big. 68,000 people attend the university. Like, as I said to you, we can't understand the numbers. They are so much bigger than the numbers we have here. Does that make sense? All right. So on this tour is a week-long tour with me, with Conrad, our whole team, with all of our US team and our US liaison. We have got them to set up an Australian and American team here in Australia. Same time zone. They're based in Melbourne, in South Melbourne specifically, to answer any questions. They have a complementary team in the US, right, that look after all of us when we go over as well. Because they have a belief that once you actually understand the lay of the land, once you've been around, you may not need to go back every single week or month or quarter. This young guy, Luke, he now wants to buy a property there, similar to this. He wants to buy one there every quarter. Do you think he needs to go back every quarter? No. In fact, the other property he bought on the last tour was a $50,000 property as well, but it had a brand new swimming pool which was worth $20,000. Who thinks that's really good value then? Right? Now, he won't get such a high return. He won't make a 30% return, but he believes he'll make probably a 12 to 15% return. Would that still be okay? Yes or no? All right? So, who would love to join us on a $5,000 tour? If we took you on the bus, if we introduced you our contacts and you got first pick of some of these properties, who'd want to do that? All right? Well, I'll tell you about qualification in a moment. All right? US tax laws. We've worked closely with some of the specialists over there and here to work out what's best for you, because if you went to an ordinary tax specialist in the US, They would say to you, well, this is the best structure that we know of. Yes, that's true for US-based citizens, not necessarily for Australians. This is why we've got the right people in Australia and the US who talk to each other. Who thinks that would be valuable, right? Because you may not know this, but you might be able to quarantine some of your money there, tell the ATO and say it's over there, it's quarantined under the dual tax treaty. That might be perfectly acceptable because tax rates in the US are, guess what? They're lower than they are here. Who likes to pay less tax? Anyone? All right. Do you know in the US, in Australia, if you went searching for a property, that's not a tax deduction. To visit an existing property, it is. But under US tax laws, it is tax deductible. So your company over there could send you literally all over the world for the rest of your life investigating properties, whether you buy or not. Who likes the sound of that? You see, this is why it's important to have the right structure and the right people advising you, because you could design the life you choose and have the tax office pay for it. Who likes the sound of that? Anyone? But you wouldn't do anything just for the tax reason, of course. You want to make the money. You want to make the capital growth. You want to make the cash flow return, correct? But it's nice to have those extras thrown in. Now, in Australia, what we do is we have a very specific 52 points of criteria for every property that we look at. Over there, they have a very detailed checklist as well, but theirs is different to ours because different things happen there than they happen here. Similar, but it's different. So what they'll do is they'll show you and teach you all that due diligence. In fact, their team is so big, whenever what's called a tape of properties, which is actually a list of properties, goes up for foreclosure, they actually send a whole team of people, 15 people, out on the road. They go and inspect every single property and upload that information so the person who's going to be bidding knows which properties are good, which ones are no good, right? Because it's not just any property. Because you have to then bid on it. You win it, you have often 24 to 48 hours to come up with all the cash immediately. The reason the banks work closely with our team members over there and our partners is because they've got the cash and they buy from the banks literally 300 to 500 properties a week. The banks are very happy dealing with them. They have a very close working relationship because they solve the bank's headaches. Who understands that? The banks want to purge themselves right now of toxic mortgages and toxic property deals, right? And they want to start afresh. What's going to happen in the US is they are completely redoing the banking and lending laws. Do you know about this? Once they do that, lending will go through the roof. And that's what's on the front page of this article. It actually says, once Americans can lend again, they will buy homes in droves. That's what will actually happen. You understand that will happen. When they start buying in droves, what will happen to the price of properties? They'll go up real fast, okay? So, through our partners over there, our partners are willing to do a whole lot of things for our members. Look at these. They are willing to do property selection. Based on the same criteria, they will make sure that we get the best deals. They will also help us get finance. There's a test for this. Are you willing to do the test? Put your hand out. Everyone take out your hand. All right? Face it towards you. Palms towards you. Hold it close to your face. Do you feel any breath? You qualify. We are guaranteed to get, listen to this, guaranteed to get lending for our members. Do you know how significant that is? US people can't even get lending. So our members will get up to 75% LVR loans. Do you know what that means? Instead of buying with your money one property, instead of buying one of these with cash, what if you could buy 4? What if you could buy 4? Does that give you potentially 4 times the upside for when the market returns? Yes or no? That's it. The interest rate could vary from anywhere from 3.99 up to 12%. But even if you paid 12%, would you pay 12% for 5 or 6 months and then be able to refinance because now you've got a FICO score? Would you do that? Oh, well, great. Well, if you got one, you might qualify for some of the lowest rates. All right? Some people don't have a FICO score, but think about this. Even if you paid at a higher interest rate for 12 months and made the repayment every month, built up a score, and then you could refinance to a much lower rate, maybe 3 or 4 or 5%. Would that be okay? Because you could, do you know you could get loans for up to 30 years in the US at really low rates? That's insane. All right? So we can help you do that. Now, one of the things they also do is they do refurbishments and repairs. Now, they don't normally do this. This is normally part of their business because most of the stock they get, 90%, is they flip. To who? To wholesalers, to middlemen, to real estate agents, and to institutional buyers. But we have said that our members specifically want to hold properties long term. Why? Because they're not flippers, they're buyers and holders. Because Australians are very interested in making the cash flow number one. Number two, they're interested in the long-term buy and hold, the potential capital upside. Who would agree with that? Right? Why sell a good asset to someone else when you can get all the future capital growth? That's my question to you, right? Now, what they're willing to do is for our members is to actually build up their refurbishment team. They call them a rehab team. And I said, well, for us, rehab means you rehabilitate people, you renovate properties. For them, it's just, well, we rehabilitate houses. So, but anyway, they thought we were weird. I thought they were weird. Doesn't matter. What they're willing to do is do what are called rehabs up to a rental level. That means a new lick of paint and often new carpets, that's it. So they have a team that goes in, they do a clean, they do a repaint, recarpet, bang. But they're willing to do that for us on a wholesale basis. Now, do you understand that if you went over there and you did it yourself and employed people, you could be in violation of visa requirements. You could get thrown out and you might not be able to go back to the country. You understand that, right? So it's important to understand what you can and can't do. But they can do it for you. You can still get quotes from other groups, but they will do it fast, efficiently, and they'll do it at a wholesale price. You can use them or not use them. It's your call. As Property Direct, we're always there to help you as much as you want to be helped. Does that make sense? Remember, they are not willing to offer this to any of the other clients they have on their books as property managers, only to us. Why? Because of the bulk we have said that we can do with them, right? And they've seen how many people are on our database. This group has never done any sales or anything like this through seminars. They actually don't understand this, right? They just sell to wholesalers. That's all they do. They get a whole lot, they chunk it up, and they sell it to wholesalers. We have said, because our members love property, and because of the parity Aussie dollar, and because we can get them financed, that they will buy at the same volume level as a wholesaler. Who understands that? So for them, it's just another wholesaler. But what they like about it is because our members want to hang on to the properties, that they can actually do some more renos, add value, and they'll earn a small margin on that. But also on the property management side, they earn margin for a long time to come. Who understands that? Right? So they're very happy with that. They're willing to give it a shot. And they've said if it works well, they want to work with us on a broader basis. And that's very exciting to be the first company to deal with this joint venture with them on that basis. Now, some of the other things we can do is we can organise insurance, the solicitors, the building pest inspectors, the accountants, setting up the US bank accounts. All of these things we can actually negotiate and get set up for our members. Now, just to show you where Phoenix, Arizona is. Phoenix, Arizona is right there. It's about an hour's flight from LAX, not far from Las Vegas as well. That's what it looks like. It is a big city. Just to give you a perspective, it is the 5th biggest city in the US. We're not talking little backwater here. 5th biggest city, right? Now, in Arizona, we've identified Arizona as our primary market. We've looked at a whole lot of economic indicators. The main one is we pick cities that grew fast, drop substantially, but have a strong economic base and a very strong resilient rental market, because we know they will be some of the first to rebound. You can go to places like Detroit and Ohio and a few other places, and you can buy properties there that have gone up and fallen dramatically. But if half the population has left that area, never to return. If businesses have shut in Detroit, never to return. What do you think the economic future of that place is? Pretty bad. Who would agree with that? Okay? So, our partners allow you to actually buy properties, not just at the lower market price, because that's what it used to be, but the retail for this property could be, for instance, $70,000. And if you went through their lower tier sub-wholesalers and distributors, you might pay 70 grand, which would still be excellent value, agreed? But because you're getting it direct from the super wholesaler, they only make a small amount of money on each property, somewhere in the order of like $5,000 to $6,000, because why? They need the money to actually secure them, hang on to them. They need to often do a very small reno. They need to pay for their people going out. I don't mind them making a small amount of money, as long as I know that I'm buying at a really good price. These prices are literally below bank vals and or below government valuations, right? So you're buying at an incredible price in the US market, but you're doing it in a way that's under a system that's actually very, very safe. So let me tell you more about that. In fact, in the US market, you can start investing through our partners from as little as $25,000. In fact, if you bought one of these at $50,000 and you managed to be able to get a 75% loan, how much do you actually put in? If you qualify for a 75% loan, how much do you put in if you bought a 50K property? $12,500. Do you know some people pay more in stamp duty and get nothing for it? Imagine getting a whole property for that that's positively cash flowed. Phoenix, Arizona. Our network allows people to get access to properties, as I said, 10 to 20% below current market valuations, and that is well below government and bank valuations at the time. Here are some of the key reasons. Look at these numbers. Low prices, 3 and 4 bedroom, fully refurbished houses. And when I mean refurbished, I don't mean like the Taj Mahal, like you want to sell to an owner-occupier. This is basic new lick of paint, cleaned, new carpet if required. All right? Maybe just steam clean. All right? $49,000. Through other systems, you would have to pay 100% cash for that. Through our system, you can do it with up to 75% LVR. For the same money, you could buy up to 4 times as many properties, have potentially 4 times the upside. That's the huge opportunity. Some of these prices are 75% below what they were just 2 to 3 years ago. And let me tell you, some of these properties are only 3 to 5 years old. I'm not talking a completely dilapidated wreck. I'm talking some of these are 3 to 5 years old. And some of them are 5 to 15 kilometers from the city. I'm not talking out in the middle of the desert. Talking 5 to 15 Ks. So these are pretty good properties by any standard. All right? So we predict there's going to be a huge capital appreciation. When the US market starts to move again, we believe they'll at least go back to where the prices used to be, and they'll continue eventually moving on. That will take some time. I believe that probably about 50% of this price will come back in about 2 years. Just 50% of its value. I believe just to its old value, it'll take 5 to 6 years. But if the property is paying for itself and giving you positive cash flow, is that going to hurt or is that going to be pleasurable? It's going to be good. You're going to be getting money. You can afford to hang on to it for 5 or 6 years, can't you? Because it's making you money. Who understands? Is that a much better way than a negatively geared property? You bet it is. All right? So mortgages, we guarantee through our partners, we've been guaranteed because of their finance contacts that all of our members will be able to get finance. Now, not everyone will get 75%, but even if you got 50 or 60%, would you be happy with that? Because instead of buying one, you could buy 2. Would that still be okay? One of the other things we've negotiated with them is we've said to them that our members want to buy through self-managed super funds. We have managed to get from them, simply because of our bulk. Other people just can't do this, full stop. We've been able to get from them the ability to get a CIS-compliant super loan. So you understand that super funds can buy properties and they can get loans. They have to be very specific loans, worded a very specific way. Do you understand that? And if it's not compliant, you're in big trouble, right? It's too hard for people buying one-offs. No bank in the US would lend you money full stop, let alone for a super fund. They won't do it for you. We, through our bulk and our leverage and our relationship with them, have managed to negotiate that you can. Up to 50% LVR, get a loan through your self-managed super fund over there. Who thinks that's incredible? Right? That is just truly amazing, because that allows you to get twice as many properties literally in your self-managed super fund, or get in much earlier for much cheaper. Now, the rents in that area, ex-homeowners have turned to rental accommodation. I gave you all the reasons why. $850 to $1,000 a month. This means, in comparison to the Aussie market, where you'd be losing net about 5% a month, you're making 10 to 15%. That's a 15 to 20% difference in terms of cash flows. You understand? Instead of being negative, you're actually positive. For the same amount of outlay, instead of being negative, you're positive. All right? Why else cash flow is king. You need cash flow. Cash flow is like oxygen for an investor, right? It allows you to do so many more things, to buy more properties, to get involved with other things as well. All right? I'm going to share with you some of the things they've said about Arizona in reverse chronological order. It's the 4th best city in the United States for expansions and relocations. It is the best place for business and careers. It is the 2nd best city in the nation for business expansions. It is the 3rd best city for relocations in 2009. Maricopa County in 2009 population is estimated to be 4.2 million, about the size of Sydney. That's just one of the areas of Phoenix. It's not Phoenix. Do you understand how big this place is? Right? And it ranks 4th amongst the nation's counties and is it has greater population than 24 of the states in the US. Phoenix is the 5th largest city in the entire USA. All right. Since the early 90s, Arizona has experienced tremendous population and job growth, and it's grown 24% since 2000. The state has been among some of the top performers nationally in job creation for several decades. Do you think that's an important characteristic? Do you think people there are good at attracting businesses, which reinforce the local economy, which keep people busy and working and paying taxes, state, local, and county? Yes or no? Yes. This is why it's a prosperous place. They have listen to this, they have an average age of 34. Why is that significant? What do people do when they're around 30s, early 30s? What do? They have babies. When people have babies, are babies expensive? Yes or no? So, guess where they'll be pumping all this money into for their children? Into the local economy. Who thinks that's a very important aspect of the economic cycle there? Right? So this is why it's so important. This is why if you went to places like Florida, where people have a median age in some parts there of 60, they're not going to be spending a lot and pumping money, and they're not going to be having babies, correct? This is why it's so important to understand these economic drivers and what they mean. All right? They're expecting 60% population growth there. Look, Phoenix, one of the other things that you don't understand about Phoenix, it's a major tourist hub. Now you think, why Phoenix? Has anyone heard of a place called the Grand Canyon? Yeah, we have a rock here big enough that can fill it. The Americans didn't think that was very funny, by the way. Uluru, right? But do a lot of people, do you think, go to the Grand Canyon on a regular basis? Americans love to travel within America, right? So there's a huge amount of people, of tourists, that go there each year. In 2008, Sky Harbor, which is their largest airport, serviced 40 million passengers. So it's about twice the population of Australia went through their airport one year. I'm telling you, you can't get your head around some of these numbers. They are this big. All right? Now, just to show you some numbers, this is Phoenix. Look at the median house prices, what happened to property prices in Phoenix. They went up and they came down sharply. All right? They're the sort of places where opportunity lives. What lives there? Come on. Opportunity for you to make money. If you want to make money, you need to find places that go up and fall fast, because people there are still in fear. They're still scared and they can't get money from the banks. But do you think soon that the fear will go away? Do you think the money will start becoming available? Do you think people will rebuild their FICO scores? Guess what will happen to these property prices then? They'll go up a lot. This is why there is only a 6 to 12 month opportunity in Phoenix, right? Property prices there have already started to edge their way up. There are places in the US that have fallen equally, but they're going to stay down for a long time. There are other places that already have these green shoots. And let me tell you, other people have started noticing that Canadians are the biggest group buying in Phoenix right now, right? Because they've got good credit and they can buy in the US very easily, no problem. Their banks will lend them money, right? There are some institutional investors that are targeting Phoenix as well. So I'm telling you, you want to make some money, you want to make some of this upside, you better start acting within the next 6 to 12 months. Otherwise, the game will be over. This is a complete game changer. You can't get access to property deals in Australia where you can get this level of growth, a 500% return in growth in the next couple of years. It's just impossible. You can't do that sort of thing in Australia. This is a unique opportunity that will not last. Now, even in bad times, recession times, the population of Phoenix and its population growth did not go negative. A lot of other places went negative. Phoenix, even in the worst times, it still grew, but grew at a slower rate. Why? Because of the university. How long do people go to universities for? 3 to 5 years, correct? And a lot of people in the US have realized that they need to massively reskill and fast. Where do people go to reskill? Universities. And in many cases, they get grants from the government, right? And they have to repay these student loans over a longer period of time. But they get those loans that allows them to go to these universities and pay for their lifestyle there. So this place has got a very diverse economic base. We have education, we have tourism, we have a lot of other companies, the Forbes 100 companies that are there as well. Our partners there is a group called Total Property Solutions. Let me tell you a little bit about them. They understand the importance of offering really good US property deals to our members, right? So these properties, a lot of them, listen to this, are already tenanted. They will look after the refurbishments. They will make sure the refurbishments go to plan. They look good because they're the ones offering the guarantee. They need to know the refurbishment's done properly because otherwise they're trying to pay you rent when they can't get enough rent. So we've done what's called a risk reversal. We've put the risk back on them, so they're going to make sure the refurbishment's done quickly and it's done well enough to rent that property for 10 years. So is that peace of mind or what? Right? Also, they got value-added services. They got a whole team of accountants, solicitors, people they deal with on a regular basis. These people will make sure that you get your ITIN number, which is like your tax file number. They'll make sure you can set up your bank account. They'll put you in touch with all the right people that you need to make this smooth and easy for you. We've got the same people here in Australia as well who work with them. Property management. Do you know in some parts of the US, you could buy a property on the internet tomorrow? Do you know in some of those parts, there are no property managers. There is no one to look after your property. And in some other parts, the property managers are unregulated. It's not like Australia. If you want to actually have a real estate office in Australia, you get a real estate agent's license, right? Or a sub-agent's license. Whether you're in property management or sales, you need that license. Who understands? In the US, a lot of the real estate agents or realtors are just salespeople. They don't do rentals. Rentals are ad hoc. It's not regulated. So some places you go do not have rental people. Some of the places do have rental people will not go into the property you've just bought. Because unlike Australia, in the US, you could literally have a beautiful property. Across the road, you could have a gang home. Right? You could literally, across the road, go 10 levels of demographic down. Doesn't happen in Australia. It's much more homogeneous and also it spreads out or changes much more slowly. In the US, you cross the street, you could be in a really bad neighborhood. Does that make sense? So we had a situation where someone bought a property that we know of, right? It wasn't through us, but they bought it on the net and they didn't know why they couldn't get a property manager to help them. They couldn't get any rent because the gangbangers running meth coke labs were in the rest of the building. They were too scared to go in. So how would that work for you? Wouldn't work very well, would it? Okay? Some people that I know bought some cheap properties, but they didn't realise in the northern suburbs, it's bitterly cold. And in those properties, they ripped up all the floorboards and they made fires. Some other places, unless you actually insulate and look after the pipes, they freeze and they burst. Can you imagine replacing all the plumbing on a property? Do you think that would cost a bit? Yes or no? This is why a lot of people in the northern areas are moving to the southern areas because it's less maintenance, it's cheaper, but more importantly, the cost of oil, heating oil, has been going up dramatically. And when people don't have money, they don't have money to pay for this. They want to move to warmer, drier climates. Does that make sense? This is why these southern areas that are warmer, particularly if they're dry, are actually getting such a strong population shift to them. And because you've got employment there, they're not just moving there for the climate, they're moving there for the job opportunities. Who's understanding that? All right? Now, what we want is a system to make it entirely hassle-free, and that's what we've done by having the right team in place. No maintenance. They look after all of this. You give them, just like in Australia, pre-authorization to this level. Anything above that, they'll call you. Now, what will also happen is you can still get independent quotes, but isn't it nice to have the opportunity for them to look after everything if you choose to? The mortgages, we've organised for all of our members to be able to get and qualify for mortgages. That's incredible. Just about everyone else in Australia who's going there is having to pay cash. Our members can get 2 to 4 times as many properties with the same amount of cash, and that's amazing. And some of those with potentially FICO scores may qualify immediately for up to 75% and as low as 3.99% loans. All right, we are getting pricing and discounts based on super wholesaler levels. We're offering clients up to 75% discount off the previous highs of 2008. And that's still 10 to 20% below what current market is. You can't do this cheap or easy yourself. You just can't. You don't have the time or effort to drive around all the different counties, inspect all the properties. This is why you need a system. You need people on the ground. This is what we can do. And we're doing this for all of our members. After sales support, they have gone to the trouble of setting up an Australian-based office in South Melbourne. It's literally a couple of streets away from our head office. All right? They come in the office often. We talk about what we need to do, and they're very easy to talk to. They understand the US market and the Australian market. US bank account, once you've set up one and you've provided your equivalent of 100 points of ID, and they'll help you through that whole process, you can just set up more very easily on the telephone or via fax. Super easy. Australian accountant will help you understand the double tax treaty and all the different options you have to maximise your position within that. It's literally a turnkey model. They don't do this anywhere else in the world. We've set up a system with them that makes it super easy, and they want to work with us, make this work so they can do it again and again, and we will partner with them through other parts of the world, starting with Australia, then New Zealand, and then Asia as well. Okay? Now listen to this. They are using their own money to literally buy properties on behalf of our members who will come across in the January trip, right? So they have a large belief in us that our members are serious and want to buy, because they're going to be buying properties and holding them longer than what they normally do on behalf of our members, right? Because we've said to them that our members, they want to get into this market, they want to get some of the best deals. Would you like to see some of the deals? Would you like to see some of the numbers? Yes or no? Come on, you excited? Look at this. Look at this property. Purchased in February. Which year? Which year? 2010. This year. So how many months ago? About 9 months ago. 50,000 US dollars. So that's a little bit less in Aussie dollars. Right? Take off about 1 or 2%. That's Aussie dollars. Look at this. It's a 3-bedroom, 2-bathroom. This is a practically new house. It's only a couple of years old. 50 grand. It previously sold in mid-2007 at $183,000. Probably went up to sort of mid-200s. You are getting a gross return of nearly 21% rental return. Who'd be happy with that? All right, look at this one. I like this one even more. Look at this. It's a 3-bedroom, 1.5-bathroom, sold in March which year? This year. March this year. This could have been a property you bought. $23,000. Our initial people had to pay cash. We hadn't had the loans set up. $23,000. Would you still be okay paying 23 grand? And getting a 35% gross return. Last time it sold was at $70,000 in late 2008, but it was $135,000 in 2004. Would that be an okay deal? Yes or no? What about this one? 3-bedder, 1-bathroom, $39,000. Its rental return is 23,000 or 23%. Look at this one. This one's also sold, was 19% rental return. It was 150,000. It was a 4-plex. This one was much newer than the one this other guy bought. Didn't need any renovation, and it last sold for 220,000 in December 2005. Look at this one. I don't like, it's got arches, but you know what? It's not what I like. I got to not get emotional. I don't like the Californian sort of arches. It's about the numbers. What's it about? The numbers. Look at these numbers. Gross rental return, 18%. Purchase price, $45,000. Last resale, March 2006, $170,000. So this probably went up to mid-200,000s as well. Look at this one. 20% return. This is like a townhouse. $46,000, last sold for $143,000 in December 2007. This one, look at this, is like a brand new house, or close to it. It's $81,000, gross rental return 14%, last sold for $215,000 in May 2007. You've probably seen the trend. The houses are more expensive than the townhouses, which are more expensive than the apartments, right? But the apartments give you a higher rental return as a yield percentage than the townhouses, than the houses. Same sort of concept in Australia, but the numbers, like take a zero off Australian numbers and that's what you're paying over there. Is that extraordinary or what? That's just unbelievable. Look at this one. This one sold. This is an apartment. It's a 2-bedroom, 1-bathroom apartment. Would that be okay? In Australia, in St Kilda, that's how much stamp duty you'd pay. You're paying full price, $32,000. Thank you very much. Last sold May 2006, 129. So at the peak, it probably was about $180,000. You're buying for 32. Gross rental return 26%. So what you need to do is you need to start investing in literally one of the most profitable markets in the world. The US is the most profitable at the moment. Why? Because you have so much potential upside. Not growth, but I'm just talking returning to where it used to be. Has the US stock market already returned pretty much to where it was? Yes or no? Right? And that sort of thing leaks over into other areas. When people get certainty and confidence in the share market, guess what? It'll start returning to the property market. And it'll start returning as soon as the banks start lending money. As soon as they redo the new laws and they purge themselves of these toxic loans, that market will go nuts. That's why you have an opportunity of only 6 to 12 months. So, I've just covered that. Once they start lending, and also the other amazing thing right now is the Aussie dollar buying more. See, a couple of things have come together, and these will probably never come together again in your lifetime or mine. All right? Number one, in the US, they have had some of the cheapest, easiest money available. And that's caused them a huge problem. Property prices there have fallen by 50 to 75%. Even in the Great Depression, they didn't drop that much because they didn't have this extraordinary level of lending. Careless lending is really what happened. Does that make sense? So that's come together. Number two, it's meant that properties have purged right down. Another reason it's dropped so much is in the US, they have a lot of the loans are what are called non-recourse. What are they called? Non-recourse. What does that mean? It means that in Australia, when a bank closes you down on a property, if you still owe money, they chase you. They'll bankrupt you. Understand? Yes? The US, you can hand back the keys. It's called jingle mail. They send you you send an envelope to the bank, it jingles. Why? Because your keys are in it. The bank cannot come after you. It'll affect your FICO score, sure, but they can't come after you. So people just say, hey, property's upside down, here's the keys, see you later, I'm out of here. You can't do that in Australia. These people paid incredibly high prices for their properties because they got money so easily. Why? Because Wall Street got too smart for itself and said, you know what? We will start lending money through a securitization process to people that we know can't afford it for property prices that are way above what they should be, but we don't care. Why? Because we'll bundle that up into what's called a subprime loan and we'll immediately off-sell it to all these other people. So we're not responsible. So their only motivation was to what? Make more money. They didn't care who they lended at what price. That just meant more money. Whereas banks, on the other hand, who understand that the buck stops with them, they still have tight credit policy, just like they do in Australia. All right? But because of everything melted down, they got caught up in that as well. Does that make sense? All right? Australia didn't have that happen. So as soon as the US market purges itself, as soon as they redo the banking, as soon as, well, a couple of other things will happen, but in Australia, we are in a position where we have a strong Aussie dollar. It used to be 58 cents to the dollar, now it's $1.01. We actually have a very strong economy. So the financiers over there are actually happy to lend to Australians. Do you know why? Because we're considered a good credit risk, right? Also, over there, the banks aren't lending locally. People don't have the money. Even though they want to buy, they can't buy. Also, the properties have dropped so much. So many things have literally come together. This will not happen again. You have a window of 6 to 12 months. You have to think, if you want to make, how many of these uplifts do you want? 1, 2, 5, 10? You have to ask yourself, you have to do whatever it takes to be over there in the US at one of our courses with us, going shoulder to shoulder with us, with lots of other investors, buying as many properties as you can humanly buy. That's what you need to go through your mind from a cash flow perspective. All right? So, Imagine this. Imagine if you could retire on just one property, and I mean the equivalent of one Aussie property. That makes you the whole Australian salary. One average Australian property is about $550,000. If you got a 10% net cash flow return on that, that's $55K. You're retired, you're done. You can do whatever you want for the rest of your life. The equivalent of one property, you could do that with in the US. The equivalent of one Aussie property. That's just incredible. All right? And you could attain loans of up to 75%, as low as 3.99%. You could even buy property in your self-managed super fund with only 25K. You could obtain a positively return on your property, 7 to 10,000. Normally in Australia, a property costs you money. Imagine you getting 7 to 10,000 in your pocket each year per property. That would be extraordinary, wouldn't it? All right? So, look at this. Imagine if you could make 800% return in just 5 years. How would you do that? Well, if property prices there have made a recovery from their historic lows just to where they were, not growth on top of that, but just to where they were, right? Like the stock market's making a recovery. So if you had $25,000 in equity, you got a 50% loan, and you bought a property that used to be $250,000 in 2008, right? In 5 years, if the market recovered to just that level, you've made $200K on your 50 grand, right? That's an 800% return in 5 to 6 years. You can't do that in the Australian market. You just can't. It's impossible. And you've got a property making you cash flow all the way through, so you don't have to worry about that. So, this is just incredible. But it's only because of what's happening. As I said, so many unique things have come together to make this happen. This won't happen again. Not in your lifetime, not in my lifetime. If you don't take advantage of this, I bet you, I guarantee you, you'll be kicking yourself. You'll say, yeah, I heard about the US. Damn, I should have done something about it. I should have. You'll shoot all over yourself. Right? Opportunities like this really don't come around very often. This is a chance to completely reinvent yourself and your position, your assets, your liabilities, your cash flows. It's a complete game changer. That's what this is. All right? And on top of that capital growth, imagine still getting that rental return. So what we're doing, they said, let's do telly commercials, infomercials in the middle of the night. Let's tell everyone about it. We said, are you kidding? That might work in America. Australians don't like infomercials. We said the best and smartest way is we'll take our most committed members over there, right? We will film them in the field, learning, acting, taking action, right? We'll put them in the front of the camera, we'll put them on stage, and we'll tell them to tell everyone their story of what they learned and how real it was. And they said, great, well, we'll bring them over. This is the budget. We can take 50 of them. And we said, you know what? Our members don't need to fly the business class or premium economy. They'll go cattle class. Right? They don't need to stay in 5-star hotels by themselves. They'll do 3-star twin share. If you want to pay extra to have your own room, that's on your cost. That's on your dime, as they would call it. All right? So that's allowed us to take 88. We're going to take 88 of the most committed people who want to get the best results. 88 people. All right? To get this literally once in a lifetime opportunity. Why? Because property prices there are already starting to rise. Who wants to be in that first 88? Show me, come on. Who wants to be in that first 88? Well, let me tell you, it's pretty much fully subscribed. But we've got another one coming up a couple of weeks later. For that one, we are going to take the first 39. The first 39 to qualify, we are going to give them a scholarship. We are going to pay for you. Do you know the best way to lower your risk is to physically do it yourself, to inspect it, to see it, to be there before you make any decision. We and them are so confident of what you'll see that you'll just be blown away. We're going over there, we're going to be buying 20 each. That's what we're going to be doing. You want to join that? You want to be part of that? Yes or no? So, stand up who wants to be part of this tour. Stand up, show me. Do you want to come with me or not? Everyone who's standing up, you want to come with me? Leave your credit cards behind, come to the table, follow me. I want you to write down your name, your email and address. The people who fill out these forms, you'll be the first people notified so you can come and join us on this tour. Grab a form, fill it out. If you're here in a couple, just put both your names on there. Please print neatly. We will have a whole one-day event here in Brisbane. as well as Sydney, Melbourne, and Perth. We'll bring our team out. We'll have other experts here. We'll have other clients who've actually purchased already, and you will hear all this information. You'll be able to ask questions, find out what this opportunity is, and how you can take advantage of it. If any of you want to make money, you need to get over here, fill out a form. There's no obligation, there's no charge. We want to pick the people that are serious, not just the people that are curious. We want people we can work with on a long-term basis to get a great result with. And let me tell you, if I'm going to sponsor you coming over and pay your scholarship, we're going to put a camera in your face. We're going to ask you to tell people exactly your experiences, the service we've provided, to make sure that you can help other people. Because we know if you've said that you've had a great time, you've learnt, you've bought some great deals, the next time we show this to people, they will go nuts. We'll get 10 times as many people. We'll start filling jumbo jets on the way over to the US. And just grab a seat. I want to just cover one last thing with you because I know this question will come up and I want to make it really clear. Some people will say, well, I want to do land, or I want to do properties, or I want to do blocks of land. In fact, you should be asking yourself, how do I do all the things that are applicable to me? That's what the consultation's about. What we found is that for a capital growth strategy, that's where the land fits in. It's an incredible capital growth strategy. The US properties fit into being an income strategy, right? And in fact, this is my circle of wealth. Up here you've got equity, down here you've got cash flow. It starts with a job. The job feeds into capital growth asset. As you have properties that grow, that generate you equity, you borrow that out, you have further income. More income gives you more cash flow as you buy more property. They complement each other. It's not one or the other, right? This is what you've got to understand. In fact, we have other properties that you saw through property sourcing. We have so many different things. It's like going to an ice cream parlor with lots of different flavors and then trying to pick which one you want. You want a bit of all of them, correct? So this is why you have a chance to sit down and speak with me. You have a chance to maybe explore some ideas. If some of this makes sense to you, we'd love to have you as a member, and we want to coach you, help you, mentor you, and push you, because we will push you for the next 3 to 7 years to get those results. But it's up to you. So do not waste this chance to see me. Book in a time, come prepared, write your questions down, and let's see if we can both work together for your and our continued success. Ladies and gentlemen, I want to thank you very much. Thanks for your time. All the best.